Welcome to TradeTheNBI.com. This is John. This report is for the 14th of December. Popular day for me. It's considering it's my birthday. Market previously did a nice little pop-up towards the 100% line and immediately started retracing. That was all pre-market action that took place in there. And then it just literally caved. And where to? Yep. The ABM yellow, which we had at 46.57. And it's just a half point right now in post-market right below that level. And that's pretty easy. I mean, it was very clean intraday when we look at the later both 50K as well as 5K charts. You can see how clean the action was, and it started literally right before the market. We had plenty of positive extremes, and you'll see them, and it just filled them in beautifully. Even worse for the Dow, and then unfortunately here, you look at the NASDAQ. Now, you don't quite see that on the NBI, on the S&P, but not only do we have red peak on the NASDAQ, but you also now have white NBI over magenta, magenta dipping. Now, magenta hasn't dipped below the 33, but whenever you got that, you've got to expect more weakness to come. And the NQ well below the ABM yellow, which much significantly higher. That was all the way up at 16,240. You're at 16 even now. You're at the ABM yellow, which is 16,092. So slightly below that as well. So that's real negative from that aspect. We still didn't see shorts jump into that from a strong standpoint and have it eclipse green over cyan, but I wouldn't be surprised to see that take place. And if we get an orange rise as well within the DOC, then I think that you're definitely looking at a move that's going to head back towards that 50% level. So all that Santa Claus rally doesn't mean it's over, just clearly a differential between NASDAQ, Dow, and the S&P being a little bit better off than all of those. Still no real catalyst for gold because they can't figure out which direction inflation the Fed is going to ease, tighten. So that confusion only adds to it as it goes forward. We know we're not getting anything from the Eurozone, so it's staying flat right around this 112. So it's caught right between that middle point, between 108 range and the 116 that's been pretty much the peg point for quite some time. And when we got outside of it, this pullback into it was not a shock. And the fact that the Eurozone is just headed for a lot worse action. And I think that'll start to bear out, particularly in the first quarter as the numbers start to get uglier and uglier from a broader macroeconomic standpoint that a lot of people just start looking at. They just think that with the market higher and the Fed, being accommodative, that's just automatic positive. But there's so many headwinds going into it, and all they want to talk about is low unemployment, but they really miss the participation aspect of it is very low, and finding a hard time getting people to take on some of the positions that exist. And that, I've always said, inflation is the driver of wages, and if wages are forced higher, then it's going to get bad. That's why we keep an eye. Oil still hasn't stayed low enough for long enough. The reality is being still right at this 50% threshold. If it spikes back up, it's going to be much worse than we're seeing right now. But we may already be seeing the decline in economic activity is already driving that down. So watching crude draws is going to be significant underlier. Secondary one that we've been pointing out for quite some time. I mean, we had the Bitcoin shorts from up in the 64,000 range, filling in just a variety of positive extremes. Last one being the 51,000. Then we had my call to the 48 and 47,000 range, and now we're below that. The next one dropping all the way. Well, I'm going to put up the daily for you, but it goes down to the 39. At that point, you pretty much have everyone who's bought in for the year would be flat or underwater trading crypto if they didn't get out at any of the peaks. So the relentless idea of buy the dip can get very costly if you're on margin in it. And we saw that happen. That was the big, large drop where a lot of the heavy margin players were just liquidated. And it was, like we said before, over 500,000 accounts were pretty much just wiped out. And so that fuels what we're seeing still negative. I mean, we've had nothing but white NBI leading it, and we all know that those lead to first 50% and then 0%, and this last one taking place right over here at the 48 really doesn't leave anything but the zero, which at this particular stage is at 41,000. And I believe if we get to there, you're going to that 39 to fill in that set of positive extremes that took place from before, right back here in early August. And below that, you can see there's 34, and then of course, if you do that one, then 28 and lower. So there's going to have to be something or someone stepping in to buy the different levels. And at this particular stage, it is not any algos, so that's problematic. And so you see it from a 50K standpoint. And we get the little pops within there. That was the gap up that started for the weekend and just sold off completely with that MBI leading. And we broke below the 0%. And there you have it right now. It's off a couple thousand, 46. Combine that one with Ethereum, or Ether, sold off from the early gap up in the morning, all positive extremes you can see from right there at the beginning of the day, and then it went deep red below the red line with the magenta ones that you see right there, and that was on the dip, and then pretty much stayed in stealth territory, and every time there was a convergence or a pop where magenta dipped under, it was an opportunity to sell it at a 50% for continued lower, and that just kept producing that over and over. So trouble in crypto world, definitely some selling, and significantly so. From a 50K standpoint, we ended up with the magenta dipping below 33, right there below yellow, and that all taking place well above the 50% line. And it just proceeded all the way through, and white got above both magenta, yellow, and then orange, and that was a play to the 0%, which is exactly where we finished out of the day, dipping down to that 0% level. And then we turned to our 5K chart, and so here it was. So this was going back to the Friday action, and it was all positive extremes leading up into that close. Then we continued the positive extremes pre-market open, and early in the morning, and then even literally right before pre-market was about to open for just regular trade, we were already still getting dark magenta dots and clean sell signals as we were deteriorating. I mean, the earliest one started right back over here, and those were all up 47.15, and then again 47.17, and then once it really legitimately turned super red, there was the 47.14, and you can see we're at 46.60. So pretty beautiful down day, and you can see it stayed all red. We ended up with all of those yellow dots suggesting that none of this was a buy, along with the violet ones right there suggesting that any of these little pops were just opportunities to attack for further weakness as soon as it expressed itself. And then as we moved across the day, when we were pretty much stabilizing at the zero, little pops got back to the 50%, produced additional sell signals. Not as many with the MBI white until a little bit later, when we had this slight divergence, which we typically look for those when they take place where the white was leading, somewhere in the 8 to 10 point range. So that was 73 right there, and it topped out at 80, so exactly 7 points right in that particular stage, and then put in a secondary sell that was pretty much the final one, around 75, and it just ticked across for a little bit, but white MBI leading through most of it, and literally you can attack that as soon as it dropped below there again at 75, with the magenta below yellow, and then it just cascaded once we broke below 50% range. It was just straight on to the zero, and it just filled back all of these previous positive extreme numbers, 46.72, 46.64. All of those filled back in beautifully, and even here in post-market, you've got magenta rising, but still with the white MBI leading, so it may pop a little bit, but that's just going to be another opportunity, probably the 64 range or 72, to be able to attack again in the post-market. So it'll be interesting to see who's going to step up to buy the dip, so to speak, or if institutions need a little more room to get back closer to that 50% to take another stab at it. And that will be the interesting one, because we've already done it once, do it the second time, and there's going to be a lot of extra pressure because, as it's been well noted, shorts are just not participating in this overall, and that's a problem because, again, I've pointed out many times that shorts drive prices higher with the covering, and it doesn't take as much for bulls to push things higher. It's a lot harder when it's got to be all buying, particularly at this point in the month as well as of the year. There's going to be a lot of people thinking, hey, I'd rather lock in my gains for the year and post them than get caught. But not impossible to see another one of those massive up rips. Could be a little harder though without the short interest again to help fuel it. So we'll see if they're able to muster that much buying power going into it. I think it's suspect, and it's easy enough for us to watch on the 50K as well as here on the 5K. But definitely watch overall that daily as well, just because it really gives us a precursor as to where things are headed. As always, though, it'll be my birthday. I probably won't be in much for it, but we will, if I get an opportunity to post anything, I definitely will. As always, though, trade well. We'll talk again later.